Thank you once again. It's not the strongest of the species that survives, nor the most intelligent. It's the one that is most adaptable to change, says Charles Darwin. Thank you, Ahmedabad Management Association, for inviting me to this webinar. It's indeed a proud privilege for me. The topic of today's webinar, which is evolution of digital banking and customer service, is a very, very pertinent subject because as we see, along with the omnipotential digitalization that we see around happening in various other industries, including banking, customer service, as we perceive, has undergone a complete facelift, and it is continuing to evolve. Customer service to customer satisfaction, from customer satisfaction to customer delight. And this transformation continues. The first blueprint, in fact, of computerization in banking industry was drawn up in the year 1983 or 84, when a committee was set up under the chairmanship of Dr. C. Rangarajan, the then Deputy Governor of Reserve Bank of India. And he looked into the modalities of drawing a phased plan of mechanization in the banking industry. Now, since then, the banking industry has made significant progress in the computerization in both its front and back office operations. I intend to take you through this journey of Indian banking as soon as possible, because we have to get into digitalization and discuss how there has been a radical change in this concept of customer service because of computerization. Now, I have divided this presentation into 8 parts, beginning with the pre and the post, the nationalization that we see in banking, developments in the digitalization journey, what promoted digitalization, how it positively impacted banking institution. I will also look into a few interesting technology initiatives, which is waiting, or some of them have already unfolded. Finally, how the expectations of customers have aligned and realigned from their viewpoint alone, right? So what I'm going to do is I'm going to recapitulate things which most of us already know. Nonetheless, I would like to solicit your thoughts on how digitalization has impacted banking and how customer service has also been shifted in the era where nowadays what we see around is that people are expecting banks to behave like WhatsApp or Amazon, where things are so convenient and comfortable for them, right? So this is going to be my basic outline of today's 1-hour lecture. Let's begin with, as I was mentioning, the evolution of banking from the pre-nationalization era. Banking was completely different. If you look at how back then there were very few banks and limited number of customers. Private banks operated in their core areas, and they did not have a national presence except for a few cities. And cooperative banks also existed, but there weren't too many, and they also catered to maybe rural populace alone. And there were also foreign banks, but they were limited to few cities in our country. So as a result, what we find is that banking appeared to be reserved for people who are supposed to be affluent. Remembering that during olden days, when our grandparents, probably they would have never set foot in a bank branch during their lifetime. So saving, if at all was possible, was maintained at home, and they weren't done in the banks. Even though society tends to kind of discredit the unorganized money lenders now, it's interesting to find that they have played crucial role in the development of economy, especially the rural populace. So the reason for this is that throughout that particular time, the fledgling nation was attempting to achieve what is known as self-sufficiency, especially in areas like food, in areas like infrastructure and defense. And because the supplies were minimal, the the so-called consumerism that we say, or customerism that we say, failed to appeal. And consumerism was limited to the privileged class, because the society as a whole, that particular class never needed any loan. And if you look at the middle class, or those who are who we assume need loans, they were quite happy with the basic needs. So obtaining any loan was not a necessity for them. Moreover, availing some kind of a loan was scorned also by that community. So people did not believe in borrowing money, especially when they have to buy some asset. So only saving were used to so-called purchase the asset. And then what prevailed was a joint family system. And though there was a joint family and they required larger homes, yet the idea of financing a home purchase had yet to take hold during that time. Automobiles and other customer goods were still considered luxuries by most people, and obtaining a loan to purchase them was beyond the realms of their thought. And moreover, the regulator, the Reserve Bank of India, exercised a great deal of control, and which was quite natural for a fledgling economy. Rates of interest were also highly regulated. As a result, marketing of services by banks were barely visible. Right now comes the if you look at a few advertisements, which are quite interesting, these are the pre-nationalization advertisements. And if you look at them, all of those were on savings and deposits, right? And there were no loan advertisement to be found, because nobody availed loans, or for individuals, it was never a priority during that time. So the most important factor for people then was trust. And if you look at the logos that you see here, they also represented what is known as trust, right? The next milestone that we see during is the post-nationalization, where there was a nationalization of 14 banks in the 1969 and another 6 in 1980. Of course, right now what we see is a different scenario with the privatization of public sector banks is happening. Still, we must remember that Indian banking, especially for the last mile customer, without nationalized banks, they would not have progressed so far. So they urged, they cajoled, they compelled opening up large number of branches. And it was also the era of anti-poverty schemes or initiatives, like the Integrated Rural Development Program, or the IRDP, and the Pradhan Mantri Rozgar Yojana, or PMRY. So several such social schemes opened up, and banks entered into what is not formally called as the unbanked areas. Branches just sprung up throughout the country. Regional rural banks were set up in the 70s to cater to the rural economy. And with such expansion came the business challenges, which were of innovation. So innovation became the key aspect in defining the products and processes there. Now, during the post-nationalization, there came the arrival of these public sector banks. Axis Bank, which started as UTI Bank, or HDFC Bank, the ICICI Bank, all of them commenced functioning in the early 1990s. These banks brought a radical change in the manner in which banking was conducted. They started weaning away affluent customers by embarking on the digitalization journey. New age banks began to market themselves on the strength that they carried, which was mechanization. They had better ambience. They had personalized services. The IT revolution, with increased salaries and the emergence of the new middle class, and most importantly, the consumerist attitude, which got ingrained in the middle class, brought a renewed focus onto the retail customer. So for nationalized and public sector banks, now the challenge was to adopt mass banking with all of this so-called inherent concerns, because like we were talking about pre-nationalization, where the focus was not on the retail, right? So now there was a significant, since there was a significant change in the mindset of the customers, and now that new generation were not reluctant to take loan to fulfill their needs. And with products like credit cards, which kind of kindled or sparkled the consumerism, providing short-term lending facilities, and banks started entering into such areas that now buying a house or a car or obtaining a loan was no longer a taboo for them. So this was looked at as a means to enhance the lifestyle or the status that customers wanted to enjoy in the society. And then came this maxim of buy now and pay later. Now, the traditional banks also got pushed into this. Their products too they also started seeking what is known as a value, providing value to customer, providing value proposition to segments of customers. So they started seeing customers as, as people who have different needs. So like, for example, the home loan product for defense personnel may be completely different from what an IT personnel looks for. So banks concentrated on such individuals, focusing on building relationship with customers and creating individual values for them. So this concept of relationship managers, having relationship managers, personnels in banks also came into being because this change in attitude and orientation influenced them to look into that area. Now, public sector banks, like I was mentioning, for them to the imperative was to digitalize their operations, just like how private sector banks did. The concept of core banking got its roots now, and banking ecosystem expanded. There were emergence of local area banks, the small finance banks, the payment banks. Financial inclusion became an essential objective of government as they have direct transfer of benefits. Banks licensing became on tap. Well, it may also appear that a dichotomy may be seen, that banks are now consolidating on the one side, on the other side, you find that new banks are getting encouraged. Well, that may not be what we are discussing now. So what started emerging in this times was the cross-selling, the wealth management, which became part of banking. Banks became truly a universal bank. It became a financial supermarket, providing all kinds of services under one roof. Then emerged the fintechs too. The disintermediation of platforms, and who infused disruption in this sector. And now I really wonder how how a common man can get confused seeing the presence of so many banks around them. And well, that you may dwell later, but we are now talking about digitalization. So post-nationalization, what emerged was people went into rapidly into the computerization. But then you might question that why was it important for banks and bank branches to get digitalized? Digitalization of bank branches, however, it is not an afterthought or so. It just organically happened, right? There was a natural progression into it. Bank branches increased significantly into how customers, started, thinking about, because all other industries also started adopting digitalization, that banking could not shy away from itself. There was, customers wanted, number of customers started growing, and with the financial inclusion, we found that humongous number of accounts started being opened. Though much of these transactions were done on day-to-day basis, and gradually we found that the transitioning was happening into a lot of other alternate channels that we see presented before us when we open accounts with branches. Footfalls were increasing. They were getting exponential because the significant number of accounts were being opened as government started pushing financial inclusion. Gradually, the workload of bank staff also became unmanageably high. naturally, when this happened, the service quality got affected. An important change that occurred was that banks now started dabbling not only in deposits and advances, but also on products or categories like mutual funds and insurance and credit cards. Thus, while becoming a financial superstore, and while focusing on customer retention, there was no other way but to adopt technology which can make it easily and to manage a situation like this. It started, the imperative was to adopt digitalization. What were the advantages then for digitalization? One, the manual intervention was not required. Data integrity, the concern of the regulator was safe. And what we see is that, which was a nudge earlier by the RBI and the government, it has started becoming a push. So digital transition in the Indian banking, like I was mentioning, was imperative. Now let's discuss the advantages, some of the advantages of going digital. Right? Digitalization brought myriad of benefits to its stakeholders. One, customers were happy because the transactions were easy. Because there were so many, there were multiple touch points like internet, like mobile and ATM. So it was customer had the choice to whichever channels that they can just go and access and avail the service. And it suddenly, banking became on the go. Banking became the comfort of their home. Now, banks were also happy because the repeated manual work, right, which required plenty of people and man hours, were taken over by computers. Now, I remember my uncle, who's retired from State Bank, unfortunately, who's also going to join us in our webinar today, he used to tell me how unbelievably relieving computerization was, and that too overnight. Computerization happened when, he was a branch manager, when he had just started his career, early years of his career. And he told me that how before that, every month he had to jot down the balances in every deposit, every loan ledger, and then tally them. And he used to tell me how Herculean the whole task was, because there were almost 300 ledgers and thousands of transactions which he had to manually do. So humongous time was being spent on collating data for submission to the bank's HO and RBI. So computerization, according to him, was a God-given relief. And the regulator, right? So we spoke about customer, we spoke about bank. Now the regulator was also happy because the MIS became suddenly dependable, right? And now CRM, which is an integral tool which helps in engaging with customer more and more. Analytics enabled bank to identify the potential customers and match with the appropriate product and services that they can go for. The processes in place became seamless. Straight-through processing became a norm for retail products. Banks became super shops. They were selling financial products across various channels. Though the initial cost of computerization might seem high, but there were considerable savings for banks on their recurring expenditure. So the so-called emergence of fintechs was also solely due to this power of digitalization. And I would say the biggest beneficiary of digitalization, of course, was the customer. The initial focus of computerization, though, was for internal comfort, or it was more on looking inward for a bank. But once the digitalization was stabilized, all initiatives became customer focused. Bank became or was in this pursuit of becoming very soon an Amazon or eBay. And of course, now not in its entirety, but we will definitely see that they're reaching there. And this story will continue. The customer will cease to be what we now call as a king, but customer will emerge as an emperor. Right? So let's look at certain milestones of digitalization. How did we actually go about digitalization of banking? This journey was very, very interesting. From the standalone PCs to core banking platforms, from branch servers to bank servers, then from physical servers to cloud. The objectives of all of this was to bring ease of transaction. And a lot of tools that customers have today is because of this digitalization. Tools like internet banking, tools like ATMs, tools like POS machines, tools like real-time payment systems, debit card, credit card, payment cards, all these services, the list is endless. And we also have the National Payments Corporation of India, NPCI, which was set up in 2008 to create a robust payment and settlement infrastructure in India, the UPIs, the BHIM, the NPCI, all of it forming a part of the payment systems domain. And again, the introduction of Aadhaar and the biometrics, the Paytm, PhonePe, Google Pay, they all have become today household names. Now, we are also moving into the social media banking with WhatsApp and Facebook also entering its fray. So in this crowding environment, I would like to highlight or emphasize on one particular application which SBI has brought in, which is the YONO. Now, this YONO has been a real game changer because banking, investment, and shopping, all three of them has been brought together. That's why we say, you only need one. That's what YONO says. And it's one easy app. The proudest factor of this particular app is that it has come from a public sector table. So I feel it's time that we relocate the label, which is on public sector banks. Now talking about the future calling, bank in 2030 will be entirely different from what we see today. The customer expectations are going to be different. Technologies are going to be different. The alternative business models that we might be tapping into are going to be different. Banks then will be forced or compelled to start putting strategy in place to help themselves prepare for this future. And with digitalization, the possibilities are unlimited. Banks just need to imagine, visualize, innovate, or bring creative minds together and see if they can we can kind of pursue or explore this untreaded territory. So banking, we are seeing, is emerging every minute, applying cutting-edge technology, cutting-edge improvisations. Some of them, like what we see today, is crypto. But crypto as a concept is kind of beyond the comprehension of common people like us. So I'm not touching there. But there are other interesting developments that are happening in our country and abroad, like what you see in the Niti Aayog's proposed full stack digital banks, which is aptly also called neobanks, and it covers multitude of networks that fintechs and traditional banks are coming together, which with the combined technological support with banking, with seeing customer acquisition in that way, where there is a synergy in the banking activities that we can expect coming up or implemented very soon. So as the name suggests, these banks will rely on internet, these banks will rely on other proximate channels, and will come with an alternative to physical branches. They are going to offer superior speed, which is a challenge, and an exceptional user experience compared to what the traditional banks do. And this will also offer transparency and low cost structures to their existing and new customers. Cloud platforms, which will take out this need for physical service, which seems to be very, very, very expensive, and will help bank to improve the revenue generation, increase understanding of consumers, understanding and getting key insights, containing the cost, delivering what is highly relevant in the market quickly and efficiently, and also monetized the data assets that the enterprise owns. Open banking, again, will provide a third-party financial service by making it easily accessible to banking transaction, and even other kind of financial data that banks and non-banking financial institutions have through the use of their application programming interfaces. Then comes the wearable banking, very, very interesting, because this facilitates transactions and payment opportunities in an entirely new customer experience, because it allows payments with just a gesture. It allows payments with something that we wear instead of a smartphone that we carry, making payments with something that we wear, as I was talking about. Then comes the facial recognition technology enabled ATMs, which will help us speed up transactions and resolve the long-standing issue, which is the misuse of typical card. Banks may also start using blockchain technology extensively, which is the concept of digital ledgers, or specifically applying what is the distributed ledger technology that estimates the need for an enforcer of trust in the existing ecosystem. So many, the futures galore, and we just need to, as banks and financial institutions, we just need to tap into them. Now talking about customer system and customer service and how we are seeing a paradigm shift in that. The question can come as, has digital revolution rewritten this concept of customer? Who is this new customer then? What has their needs and expectations changed? Are the banks equipped enough to address the concerns of this new customer? Well, the customer profiles have indeed undergone a paradigm shift. Earlier, banks used to look at them just as customers, but now banks have started seeing them as the Gen Next, as a baby boomer, as a silent generation, as millennials, as senior citizen, each of these segments having their own unique expectations. The present day customer rarely visits branches, except probably for DBT or the pensioners that we see them. So what they expect is much more delightful an experience, with also coupled with ease of operations. They need multitude channels. They're not happy with the banking service alone, but they need wealth advisories too. They're looking for Amazon. They're looking for how we purchase books, how we purchase other items, similar kind of an experience they expect from banks too. So the writing on the wall is very clear. Banks have to completely reorient themselves to cater to these different kinds of customers. There is no one size fits all here. Every aspect, from branch or digital, the ambience, to establishing how do we establish what is known as a long-term connect, an emotional connect, a stronger connect, need to be revisited on an ongoing basis. Banks need to also equip the staff appropriately to address the diverse concerns of the customers, with a lot of understanding and warmth and compassion and empathy. As we also know that frauds are in the rise in the digitalized arena. Hackers and fraudsters are always one step ahead of us. So customers also need to be responsible. We have seen so many cases where the passwords gets compromised, and this is a completely unknown world. So we got to be cautious. So when I say that, we may wonder whether customers are happy with the so-called zero contact or purely technology-based support. And a follow-up question can also be that whether there is a need for digital experience only, seeing the phasing out of bank branches. I would say not yet. I would say that customers today in the present ecosystem in our country, they have not become so matured enough for that. We cannot assume that digitalization is the only way, because then it might sound like a myth. What we require could be a phygital structure where we see a combination of the experiences that people get out of digital, and also the connect, the human touch that people experience in branches. With that, I would like to sum up my presentation saying that in this particular digitalized world, where I started with talking about how the banking was pre and post nationalization, and I spoke about how the evolution of banking happened. Then I kind of delved into the reasons of digitalization and how banks were getting benefited from digitalization, and what is what is the way forward for banks, what are the technological developments that are happening in the future. And then I moved into how today it is not the branch alone or the digital alone, but we got to be thinking of a hybrid model where we got to bring a synergy by adopting both these models in our operations. I would like to mention that here that everybody, both traditional and the private banks, we are all moving into this space of universal banking, and a lot of newer banks are emerging, and we'll see that tomorrow there could be a completely new disrupted model which is coming. However, we will not be experiencing a phasing out of physical banking. Thank you very much. And I have a request now. I'm joined with the former Deputy Managing Director of State Bank of India, Shri Haridas, and I would invite Sir, because he has, though he's my uncle, and I had even cited the example where he was talking about his life in the beginning, pre and post of computerization, the challenges that he faced during the transition. And for the next couple of minutes, I would like to invite him to share his thoughts on how his experience was while banking was going digital. So, Uncle?
Yeah, thank you. Am I audible?
Yes, sir. Yes, you are.
Right. Okay. So, good evening to all of you. And thank you very much, Bindu and the Ahmedabad Management Association for inviting me to this webinar. It's a very interesting subject for me because having seen banking over almost 4 decades in India and abroad, and also seen the entire geography of the country, the different sets of customers, different expectations, traditions, culture, the way they look at bankers. So it's an extremely relevant subject. And I would like to congratulate both of you for selecting this very interesting topic. Ideally, we could have had a full day of one-to-one session or sessions for looking at the way banking has grown over the years. So now, see, technology has grown to such an extent that everybody is running after customers, offering multiple channels and new facilities. And the abundance of alternatives have left lots of options for the customers. So what is the challenge for bankers now? It is not just acquisition of customers. The interesting part is how we are going to retain our existing customers, giving them delightful experience. It was a challenge for me when I was heading the retail business vertical of State Bank of India. And I would say, interestingly again, every day the statistics used to come to me. I was not interested in the number of accounts opened on a day. I was more concerned about the number of accounts closed on a particular day, because that showed some dissatisfaction among the customers, or we are not coming up with the expectations of the customers, and we need corrective actions. So it was a very, very interesting journey across different banks. And I'm sure Bindu would have taken you through the journey of digitalized banking and the transition in customer service. In my opinion, humble opinion, I would say, across different banks, the most important stakeholders in the banking industry is customers. Without having satisfied customers, happy customers, you're not going to survive. I used to tell people, since I was, the housing loan vertical was reporting to me, and our bank was offering the lowest rate in market, I was telling people, see, there are banks quoting higher rate of interest than our bank, and they are getting sufficient business. That means there is something beyond the rate of interest which captures the imagination of the customers. So essentially, that is the delivery aspect, the service and delivery aspect. So I always used to tell my people that this is the most important criteria for you to see when you come up in your career. So when I look back at my banking career and when the computerization started, the digitalization journey was a very tough period because we had to digitize all our records and then go for digitalization. So what happened was the initial stages of computerization, the focus was inward. It was more for reducing the workload of branches and for ensuring data integrity. The customer face, that is, the customer facing facilities started coming later when competition became a very important element in the system. So I would say whether the processes are computerized, digitalized or not, the customer connect will always remain. I still have customers from my first branch that was long back in 1990 connecting to me for advice, and he was so happy connecting to me, and so was I, because he would have seen lots and lots of officials across the last 4 decades, but still, or 3 decades, but still he is feeling so happy and comfortable to connect to me. So that is the essential part of it. Whether you are having a digitalized environment or a brick and mortar branch experience, ultimately what gives you customers by way of acquisition or retention, it is the simple quality of your connect. So I also met a lot of customers having worked in different associate banks across the country and state bank in India and abroad. I have spoken to thousands and thousands of customers from different categories of life, from Gen X youngsters to millennials to senior citizens. And again, in my opinion, whatever we say about Gen X or millennials looking at digitalized experience, they were all very happy to have somebody to handhold them in times of essential requirements. They can go to digital, but last point, when they come to a crux where they need somebody to handhold, they needed somebody. So that is where the connect counted. So what is important here is we should have, like Bindu was saying, we should have a combination of the physical ambience, beautiful ambience, excellent facilities, high quality service combined with a delightful digital banking experience. That is what is going to drive the banking in the country for a long time, because the customer ecosystem now is not sufficiently mature to adapt 100% to digitalized banking. So now, what are the expectations of the customers? Okay, again, Bindu would have presented the expectations. I would say again, when I talk to customers across, whenever I visit different parts of the country, and I meet customers, in groups or in one-to-one conversations, what they are looking at, especially the young generation who have seen, who had experience abroad, what they are looking at is an app like Zomato, where you order for a service and it will be delivered at your doorstep. Okay, or you can collect it from delivery points. So digital presents unbelievable opportunities. What we have seen in the last 20-30 years of Indian banking evolution, it's all due to digitalization. All the FI, now financial inclusion. I would say I was in State Bank when the scheme for providing assistance to women beneficiaries, okay, under PMJDY. It was in April 2020, the first installment of 500 crore, 500 rupees per customer, a women beneficiary was to be released. And we had 8 crore customers. Okay, and the payment was to be made in 4 days or 5 days. Okay, it was an unbelievable task. Nobody would have thought about servicing or serving 8 crore customers in 5 days. Okay, but we were up to that challenge. We had almost 20,000 branches across the country, catering to the lower segment of the society. Then we had about 60,000 business correspondents. We formed a team, had very meticulous plans, We also collaborated with the district administration across the country, and there was not a single hitch. It went on absolutely smoothly. It was because of the digital power. Okay, that is where had it been for had the digitalized facilities were not available, probably it would have taken months and months for releasing those payments. And you will not believe the amount of crowd or the pressure the bank workers would have faced. So here it was a seamless execution where the money went straight to the accounts of the customers. When they came for withdrawal, we made it, we handled it in such a way with the help of our business correspondents, and it was a very smooth affair. So what I am saying is digital has got tremendous opportunities. Okay, we have only touched the surface. Like Bindu was making mention about the new initiatives. See, the innovations are happening across the country. And now India is in a position to absorb all those innovations very easily because of the highly digitalized environment. Unlike earlier situations when something was happening in UK or US, it used to take years. Now, see, India is the cradle. Everything is happening here, and going forward, all the technology initiatives are going to be developed in our country because we got almost, I would say, nearly 2 lakh bank branches where you can experiment everything. Okay, so we can have sandboxes of different kinds to test everything possible. So, it is a very interesting terrain. Unfortunately, I am out of the system when the initiatives are becoming extremely interesting, and technology is a big driver. So, and you just look at Yono. Okay, Yono is one app which you will not see anywhere in the world. In fact, it was appreciated by bankers across the world, and nobody expected Yono to come from State Bank, a public sector bank. Okay, so that is the power of digitalization or technology. The challenges going forward, in addition to retention of customers, now what is happening is there are a lot of players in the market, additional players in the market like fintechs, a lot of startups coming, neobanks coming, and they don't need any capital. Okay, so they sit in an office. Fortunately, as of now, the disintermediation is only for advances. Once the disintermediation happens for deposits, I think banks are going to be in real trouble, because now all the deposits are going to the banks only. Now it will go through these entities, and banks will find it difficult to retain customers. So the other day, I was reading about an insurance company. It's called Lemonade. It is a US insurance company, and they've got a unique, simple, and straightforward proposition for customers. Buy policy in 30 seconds and receive claims in 3 minutes. Okay, that is buy policy in 30 seconds and receive claims in 3 minutes. When we speak about customer experience, I think this is what the new age customers are looking for.
They expect.
Yeah. Of course, as Bindu was mentioning, digitalization has its own threats. Okay, you have seen the number of frauds happening in the system. In fact, when I looked at LinkedIn, there are large number of comments every day about bogus messages, purported to be from State Bank of India. Okay, so our data is there across a lot of social media platforms, a lot of apps you would have opened in your system, and these are all taking away your data. So your data is not private at all now. So with all these players taking your data in their fold, things are going to be a little difficult in future if you're not careful. So my take for the customers always is that be careful and watchful. Okay, never leave your data unattended, or never get into too many applications where you will not have much of it, or which you can do in a branch premises. So that's all I have to say as of now. Probably we'll have more occasions to interact, and I would like to thank AMA again and Bindu for inviting me to this this webinar, and I wish you all the very best and have a very enriched digitalized experience in banks. Thank you.
Thank you so much. Thank you. I'm really fortunate to be his niece, and I'm so happy that you accepted our invitation, Uncle.
It was my pleasure.
And friends, the fact of the matter, why I wanted to listen from the person who have seen it all and done it all, and that's precisely the reason I invited Hari Uncle for this session of mine. And all his words have been so valuable in letting us know how things were and how things are and how things should be. Thank you very much, sir, once again. And that is it. Now the floor is open for interaction. Before I do that, this is how I would like to end my session. That every digital, as Mr. Mark Benioff says, that every digital transformation is going to begin and end with the customer. So now we can have the interactions from you. Anything, any questions or